Welcome to Money Talks, a series covering a range of financial topics like budgeting, understanding credit, planning for retirement, and so much more. It's all about helping you feel confident in your financial future. I'm Lila, and today we're looking at the different types of bank accounts and what each one does for your money. Let's start with the most common types of accounts: checking and savings accounts. Checking accounts tend to be the most frequently used of any type of bank account. These accounts make it easy to access your money, so they're great for housing cash you'll need soon, like paying bills or making everyday purchases. But because most checking accounts don't offer interest on that money, you'll want to move any cash you won't need in the immediate future into an account that pays a return. Savings accounts, on the other hand, aren't meant for day-to-day transactions. In fact, most institutions limit how many savings transactions you can make each month. That said, savings accounts do have significant benefits. Not only are savings accounts a safe place to hold your money, they also offer a return that the bank or credit union pays you, typically in the form of a modest interest rate. This makes it a better choice than a checking account for parking funds for specific purposes, like building an emergency fund or saving for a short-term goal like a car or vacation. The interest rates offered, however, can vary widely from institution to institution, and some institutions require a minimum balance to avoid a monthly fee. But what about an account for even longer-term savings goals? This is where certificates, or CDs, at banks come into play. Certificates pay a fixed interest rate over a specified length of time, meaning that earnings are guaranteed and generally pay higher interest rates than a savings account. Those higher fixed rates and safe returns come with a trade-off, though. Certificates restrict access to the money you invest until the end of the certificate term. So, opening a one-year certificate means that your money is not easily accessible for a year. That makes certificates great for stashing money you won't need right away, and you'll know exactly what your return will be when the term is up. There are lots of different options when considering certificates or CDs. But when you're comparing rates, remember that even a seemingly small percentage difference will add up over time. Looking for something in between a checking and savings account? Money market accounts typically allow you to write a limited number of checks each month, and some even allow you to make purchases with a debit card. But they also pay a modest interest rate on your deposits. This combination lets you access your money anytime while earning money too. But money markets have some barriers to entry, including required minimum balances. And many money market accounts charge fees for going over withdrawal limits. Still, it is a good option for those who want to build savings while remaining flexible. Thanks for joining this tour of common account types. Don't forget, there are many free online resources at your fingertips. On selco.org, you'll find financial education blog articles, videos, and downloadable worksheets. I'll see you for the next episode of our Money Talk series. Until then!